Well, hello everyone. So glad you're with us today. I have a very special guest. She's a mortgage specialist, Rosa-Lee. Thank you for being with us, Rosa.
I'm happy to be here.
Very good. So now, Rosa-Lee, we've been connected here in the last year, and I really like her. She's a solid mortgage broker, and she works with Meta Mortgage Group. Now they're out of Burlington, but she takes care of the whole Greater Toronto area, but also the Greater Ontario. So you could actually work with her remotely. She does all that remotely. She's very good like that. So I brought her on here because we're going to deal with the issue of three mortgage solutions that seniors should understand. And since I work extensively with seniors and my designations are geared to seniors, I thought this would be a super fantastic topic to cover. And you would be surprised uh, how the resources that are available for seniors. And then Rosalie's going to help us with that. So now, just so you know, Rosalie's contact information is going to be available in the comment section as well as the description section of the video. So that's good, Rosa. Let's get started. Are you ready?
Yes, I'm ready. Thank you so
Oh,
much for the introduction. I'm excited to get into the topic.
oh, I love it. I love it. So we'll set kind of the lending context. This is an educational video for those listening. You want to stay to the end because the second half is where the really good juice is going to come.
Yep.
So tell us, Rosalie, before we get into the specific mortgage strategies, can you help us understand what's the difference between an A lender or a B lender or a private lender, which I usually call C lender? What's the
Mhm.
difference and why the distinction matters later in life? Because we're geared to seniors here on this call.
Yes, for sure. So I'm sure many people have heard the term A and B lenders. So your A lenders are your traditional banks, your prime institutions, and they tend to have the strictest qualification guidelines that are primarily based on your tax returns, your debt to income ratios, as well as stable employment income. So
Mm,
typically your A lenders, they provide the best rates, the most competitive rates, but on the flip side, they also have the least flexibility. Now, when you think of your B lenders, which we also refer to as your alternative lenders, these
mm,
are designed for, they have programs designed for clients who fall outside of the traditional banking guidelines.
yeah.
So you'll see it's commonly used with business owners, incorporated professionals,
Mm,
contractors, and those that earned on commission based income.
yeah.
Yeah, so these are great for those that may need an alternative method to verify their income because how they have, their income set up may be different than how you would traditionally do your income taxes and things
Mm,
like that. Another point with alternative lenders, they offer more flexibility, slightly higher costs, so slightly higher
mm,
interest rates, and it
yeah.
would also trigger lender and broker fees. So that's something
Mm,
to keep in mind.
that's right. Now,
Yes. Well,
now this is
I
good.
didn't
Now
talk
go
about
ahead.
the
Yeah, yeah.
private yet. Okay, no worries.
Yeah, that's good. So, that's good information to know. And I know what happens is when you meet with a broker like Rosa Lee, she helps you think through what's the best mortgage solution for you. And I like that. And I appreciate that. So, gearing to seniors, help us understand, in light of what you just told us, how do how do lending options typically shift once someone is retired or they're approaching retirement?
Mhm. Well, it's just differently because as people move into retirement, the way they qualify changes dramatically because lenders focus less on your assets and there's more
Mm,
emphasis on stable income in your remaining working years. So, keeping that in mind, it's important to understand alternative programs now that you're no longer in those peak earning years or you're
yeah.
exiting the workforce. Another thing to keep in mind for those that are entering retirement, especially, is that Canadians are living longer than they expected.
Mm,
So even just understanding your options as, if you're retiring, let's say at 65,
yeah.
realistically, your money needs to last for another 20 to 30 years.
Mm.
So understanding the different options available to you will allow you to incorporate them in your plans.
Well, that's good. And there is a shift. And I find, when you work with people in the younger years, they can't appreciate the reality of that shift, when they get in the later years. But then reality kicks in and it's like, uh-oh, their options change in the later years. And that's good. Let's focus a little bit on terms of home equity, right? So home equity, um, so the question here I got for you, Rosa, is why do you think housing equity often becomes a focal point in retirement planning conversations?
Well, for many Canadians, your home tends to be your largest asset.
Mm,
So you'll find with a lot of retirees, they're equity rich, but
mm,
they have poor cash flow.
yeah.
So now understanding that most of your equity is tied up into your real estate, it's really important to understand the different strategies on how to
Mm,
tap into that equity to help support you within your retirement.
well, that's good. Now, what challenges do you commonly see when seniors are asset rich but income constrained?
Some of the challenges I see with seniors when they are asset rich but don't have a substantial income is they tend to have issues with managing home repairs.
Mm,
Think of like replacing your roof or the water heater, things of that nature.
yeah.
I find there's also difficulty with affording things like medication,
Mm,
PSW support,
yeah.
and even renovations to the home for accessibility purposes.
Mm,
So there's quite a few things. Another point is also rising property costs because even if you're somebody that's mortgage free, there's
yeah.
still costs to maintain the property. You still have your property taxes to cover, as
That's
well
right.
as utilities and things of that nature. So what ends up happening, unfortunately, is you'll find a lot of seniors end up relying on consumer debt or private lending, which is
Yeah.
very expensive and it doesn't really help
Yeah.
to alleviate the issue.
Yeah. Yeah, that's a good point. And, I think in light of the challenges when you're in the older years like this, in the senior years, the pre-senior years, I think it's good to know that there's mortgage solutions to help you in the long term. So, Rosa here, she's going to help us understand and think through three strategic mortgage solutions. So, the first one, we'll call it equity-based mortgages. Okay. So, Rosa, tell us what do you mean by an equity mortgage, and when does this type of solution make sense for a senior?
So when we think of equity-based mortgages, what that means is that it's still your traditional mortgage, but the qualification for that mortgage relies heavily on the equity that you currently have in the property.
Hmm.
So
Hmm.
typically it will allow you to qualify to pull out up to 50% of the loan to value of the property. So that's
Yeah.
50% of whatever the property is currently worth.
Hmm.
Um, Key thing to note is that even though it doesn't require you to qualify based on your income, it still requires monthly payments. So this is best suited for those that are either pre-retirement, so they're about 55 plus, so they're still earning, and those that have a significant equity in their property, and clients that are still earning a level of income where they're still able to manage the mortgage payments.
So
Um,
go ahead. Yeah.
No, I was just gonna say, I noticed like with some of the uses that you'll find with clients in that position that end up using an equity-based mortgage,
Hmm.
typically you'll find people use it to build like rental suites.
Oh
So that
yeah.
allows them to earn additional income when they enter retirement. Or, another popular thing I'm sure you've heard of as well is the garden
Yeah.
suites, right?
The garden
Um,
suites. What's that?
yes. So a garden suite is, let's say you have a large plot of land
Yeah.
with your property. So you'll find people build an extra house in the backyard, let's say,
Oh,
that they
I
can rent
like
out.
that. I'm moving
Yes.
in. I'm going to move in. They're building for me. I didn't know it was. I didn't know about the name Garden Suite. That's good. Yeah.
Yes, you'll hear two ways to refer to it. Is either your garden suite or they call it an ADU, which stands for additional dwelling unit. So those are the two
Okay.
phrases you'll typically hear.
Very good.
Another use as well is renovation so that they can age in place. So if you're in your
Yeah.
50s or your 60s, you start to
Yeah.
sort of think about, okay, how can I make this home more accessible so I can
Yeah.
retire and live in it comfortably? So
Yeah.
there are many use cases for it.
Yeah. I know. I have a number of clients who, based on their current health and age, stairs are very difficult, right? So there's alternative choices that they have to do. So that's very good. So, and we're still keeping with this equity mortgage concept. Now, how can this particular strategy support, first of all, cash flow or the lifestyle without derailing the long-term kind of financial plans that they may have?
So when it comes to the equity loan, I would say
Mhm.
it's typically used in cases where you're doing something to help improve your current financial position. So
Okay.
the one route was the rental suites
Yeah.
within your property, but the other route people tend to use it for as well is preparing your home for a future sale.
Yeah.
So let's say you've lived in your home for the last 30 years. It could use a little work in order to make it more marketable and maximize the sale.
Yeah.
So it's great for that, as well as even secondary property purchases. You'll find some people may use this loan
Okay.
to downsize as well.
Now that makes sense, right?
Yeah.
So, so there's a number of reasons why the equity based mortgage makes sense. So help us understand, talk to us about what this approach would be less appropriate for.
This would be less appropriate for someone that is not able to manage the monthly payments. You don't want to put yourself
Okay.
in a situation where you're worse off financially.
Yeah.
You also don't want to go this route essentially if your retirement income is already heavily strained. Because let's say you even wanted to use it for the purpose of creating a rental income stream, there's
Yeah.
still a lot of financial, a lot of effects of having a rental property beyond just, hey, I'm collecting rent. It's going to
Yeah.
be vacant, things of that nature. So you don't want to be
Yeah.
already strained plus taking out an equity mortgage.
Yeah.
Um, Another key is there has to be a long-term financial plan in place.
Oh, okay. Yeah.
Yeah.
Oh, that's good. So that's really good. So the equity-based mortgage, now I feel that you did a really good explanation. And I think if someone wants to talk further about it, you really need to go and contact her directly, set up a private Zoom call, and then Rosa-Lee, she'll help you think through if this is for you or not for you. And we're going to look at a second strategy. Now, this one, I got to tell you, so many people don't really understand this one, how it works. Now, there was the reverse mortgage in the US. They had a really bad reverse mortgage in the years past. That tainted the industry on the reverse mortgage concept. So we're going to have Rosalie's going to help us understand it as it pertains to the Canadian marketplace. Um, and that'll be good. So the first question for Rosalie is the reverse mortgages have evolved significantly. How do you frame them in today's planning environment?
I really appreciate you touching on the US because I definitely think
Mm,
reverse mortgages have a bad rep here.
mm,
But I also think it's just very misunderstood in terms of how it works, especially in Canada.
yeah.
So in Canada, it's no longer just a last resort product.
Mm,
Typically, they're used to help with liquidity, aging in place, and retirement planning. And the
yeah.
key difference between reverse mortgages in Canada versus in the States is that in Canada, it's never going to be a negative equity in the sense of your reverse mortgage balance you'll never owe more than what your property is worth. And that was one of the biggest issues when it came to the States.
Yeah.
And then for those that are not familiar with a reverse mortgage,
Hmm.
a reverse mortgage essentially is a mortgage that's available only to those that are over the age of 55.
Yeah.
And the loan to value is geared based on your age and your location and the
Hmm.
property value of the home.
Yeah.
So with this kind of mortgage, you are not required to make monthly payments. You're you're essentially payment optional, and the interest accrues on the mortgage balance. And you have the option to either make no payments or make
Mm-hmm.
interest only payments, or you
Mm-hmm.
have the option as well to prepay. So it can be very flexible.
Yeah. And so the way it works here, so for someone, well, let me ask you the next question because you're probably going to answer it in the next question, and then if you don't, I'll ask it. And if I forget, it's not because I have dementia, but just I forgot, right? So the next question is when structured properly, okay, this reverse mortgage, when it's structured properly, how can a reverse mortgage support two things: income stability and peace of mind?
So this is important. The key is structured properly.
Mm. Hmm.
With the reverse mortgage, you have two options. You can either have a lump sum, so they pay you out, let's say 300,000, that's what you take as deposit in your bank account.
Yeah.
The other option is for you to get a monthly income stream. So instead of them giving you a lump sum, they pay you out on a monthly basis. So typically, you'll see people, especially in retirement, use it to supplement their retirement income. So in addition to their pension, CPP, old age, they'll also get that monthly income stream coming from the mortgage.
Mm.
You'll
Yeah.
also see people may use a lump sum method to be able to renovate the home for accessibility again,
Yeah.
consolidate debt, as well
Hmm.
as avoiding a forced sale. I've seen reverse mortgages help seniors stay in their homes that they deeply wanted to remain in, but we're
Hmm.
just not in a financial position to be able to afford the additional costs happening in their life.
Yeah.
So they've been able to use a reverse mortgage to help supplement their income and pay out any like consumer proposals or anything of that nature.
Yeah. So how should seniors and their families think about reverse mortgage in the context of estate planning? So I do a lot of estate planning, and I know you're involved from the mortgage perspective to do strategy on the estate planning side. So help us understand that.
So, when it comes to estate planning and getting the family involved, I think it's very important to have family involved just to kind of get everything out in the open.
Hmm.
And it will help reducing surprises and conflict later. And I find with certain mortgage methods, it allows a senior to preserve their independence. It allows
Hmm.
them to preserve their dignity and decision making control. Because you want to be
Yeah.
in a position of power, not pressure. As a
Yeah.
senior, that's what I always say.
That's right.
Yeah, and I've also seen, aside from, there's many methods. So a lot of people have used this to support themselves so they're not reliant on their children.
Hmm.
On the flip side, I've also seen people use this as an option for early inheritance. So
Hmm.
instead of waiting till after they pass, they just take out a lump sum up front, pass that on to their children or grandchildren,
Hmm.
and then now they can focus on in their later years, just focus on themselves, maintaining their lifestyle, maintaining their health, and getting by on their own.
Yeah, that's good. So I would say like on this reverse mortgage. So if you're in a situation, you're a bit of a pickle, you're not sure what to do. One thing that'll help you think it through is set up an appointment with Rosa-Lee just on the over the Zoom like this, and allow her to ask you a number of questions, like open-ended questions, so that you can think and reason and understand if it's a good fit or not. And then when we're dealing with seniors, sometimes it's good, to have one of your kids on the call with you so that when you get off the call, you can talk it through. They can ask additional questions. But Rose is really good at helping you think it through. So her contact information is underneath, and I think that's a good idea to do that. I have one more reverse mortgage question for you, Rosa. So
All right.
I had I've had several clients over time when the topic of reverse mortgage comes up, they're afraid that they're that the bank who does the reverse mortgage is going to take the home away from them because it keeps payments. If they don't make any payments, all of a sudden we're in trouble. Uh, you've addressed it a bit but you can kind of talk about that again. What would you say to someone who's fearful in that regard?
I would definitely reassure them that that's not how reverse mortgages work in Canada. So when you get a reverse mortgage in Canada, your property is your property.
Yeah.
The
Yeah.
only thing that you are responsible for when it comes to a reverse mortgage is making sure that your property taxes are paid up to date. That is it.
Well,
They don't
very
require
good.
anything else from you aside from maintaining your property tax in good standing. And then in terms of your mortgage payments, again, it's completely optional. You are not required to make a
Yeah.
mortgage payment. However, for those that are concerned about that or are concerned about that growing mortgage balance,
Yeah.
I always let them know that you always have the option to make an interest only payment. So let's say you took out a
Mm-hmm.
$300,000 loan on your property. If you
Mm-hmm.
make that interest only payment, your balance stays at that $300,000
Yeah.
balance, right? So that will give you that peace of mind where you're still maintaining your equity in your property. You're not worried about, that pressure of having to make a monthly payment. But if you do make the monthly payment, you're also
Mm.
reducing that balance. And a key difference between your traditional mortgage and your reverse mortgage is that, let's say for whatever reason you were unable to make a payment this month,
Yeah.
like your interest only payment in regards to your reverse mortgage, there's no
Mm-hmm.
consequence. You're not going to get a
Yeah.
letter in the mail saying, hey, we're going to proceed with the power of sale. Nothing
Excellent.
happens. And that kind of peace of mind, especially in your later years, is extremely important.
That's excellent. That's excellent. So we're going to do a third option. So seniors really need to understand the first two, but the third one is one that is important that you understand as well, and it's the net worth programs. Net worth programs. So Rosa-Lee is going to help us understand that. So Rosa-Lee, help us out here. What are net worth programs? Right? I've never heard of that. A senior may say. I don't know what they're talking about. So what is it, and how do these net worth programs differ from traditional mortgage options?
So, with the net worth program, it's designed for high net worth individuals and it focuses more on the investments that you currently have, the liquidity of those investments, and your overall balance sheet. So, it's
Yeah.
less reliant on your traditional employment income.
Hmm.
Traditional lending focuses on your month to month paycheck, what you pay yourself every year, or
Hmm.
what you earn every year, whereas the net worth program evaluates your overall financial strength.
Yeah.
um, these programs are best suited amongst the early retirees, I would say, because again, with this program, what makes it similar to your traditional mortgage is that you still have your monthly mortgage payment. So
Mm.
essentially, it's your traditional mortgage. It's just the way you qualify is different. And your mortgage amount of what you could potentially tap into is almost like dollar for dollar what you have available in terms of your investments and liquid assets. You typically will see business owners use this as well. Those, especially that are exiting businesses, tend to fall into this program.
Hmm.
Clients, of course, with large investment portfolios, as
Hmm.
well as high asset, low income households, because you can have people that have a lot of assets, but
Yeah.
in terms of what they earn, in terms of salary and things like that, it can be low income.
Well, that's very good. It's very good information. When you were talking there, I was thinking about something that, if I'm at an early retirement age or pre-retirement age, one mortgage may be best suited for me, right? But then as the years go on and my circumstances change, then one of these other three, you might want to consider shifting to one of those, right? So that's where, when you work with a competent mortgage broker like Rosa-Lee, at the different phases of your life, she can help you think through, ask questions, no pressure type of discussion, so that you can think and make reasonable decisions uh, for yourself over the long term. So focusing on this net worth programs here, you've mentioned a little bit already, but who are these programs for? Just kind of reclarify, who are these programs best suited for among retirees or near retirees?
It's typically early retirees, again,
Mhm.
just because they tend to have more income or those prior to retirement, or anybody with a large investment portfolio, essentially with
Yeah.
intentionally low taxable income.
Yeah.
Yeah, as you'll find people that have like that already work with financial professionals or
Yeah.
accountants and things like that. They tend to have a
Yeah.
strategy in place. So they tend to be able to fall into this category if they have a large investment portfolio and a
That's good.
strategy in place.
That's good. That's good. So here, last question on this particular solution, and then we're going to look at just a couple more things before we go here. But how do seniors, well, how does it help them maintain flexibility as financial needs change over time, this particular mortgage?
It allows clients to preserve their investments. So think of it in the sense of, let's say, if you were to go the traditional mortgage route, but you have low
Mhm.
income, you may
Yeah.
be required to pull more from your investments to put a larger down payment, let's say on a
Hmm.
second property or things of that nature.
Hmm.
Um, or even pulling equity out your property can be really expensive and trigger a tax event. It also allows seniors or those type of clients to create access to lower cost capital. So
Yeah.
instead of taking out a traditional, like a regular bank loan, for example, you can just pull equity from your property and use that
Mm.
for, investment purposes or even lifestyle transition. So there's a lot of ways to go about it, but essentially it just allows you to avoid having to pull your investments out and have access to capital.
That's good. That's good. Now, we're going to just flip the page here. Okay, so Rosa-Lee and I, we're going to talk a little bit about kind of the family and decision making. So, when I work with seniors, I often will ask the senior to bring a family member, particularly if it's a widow. If I'm working with a husband and wife, not so much unless there's mental capacity issues with one of the siblings or one of the parents. And so when you bring in a family member, they often help with the decision making processes in financial planning. I know with my mom, well, she's a lot older now, and so us as siblings, we're involved with a number of decisions, right? We encourage her, we listen to her, we talk with her about different things. So your family unit, there's unique variables to it. Some families get a bit more involved with the elderly parents, others maybe less, or they're not able to. So that's what we're going to talk about now. Okay. So Rosalie, help us here now. How do housing decisions, okay, how do housing decisions tend to impact family dynamics and expectations?
Like you said, it can be really complex. Everybody's situation is different, and it's
Mm.
important for us as professionals to understand the person that we're working with and what their circumstances are and what's important to them, as
Hmm.
well as get a vision in terms of what things look like short term and long term. And I find housing decisions can affect, caregiving, who's responsible for that, whether that's a family member or if they can
Hmm.
have the funds in order to hire in home care or go to a facility.
Hmm.
It affects financial support,
Hmm.
inheritance expectations,
Yeah.
and family stress.
Yeah.
It's proper planning helps seniors, again, like I said before, maintain their independence and
Mm.
preserve dignity and reduce any friction that it may cause
Hmm.
amongst families. Um, it's so important to be able to at least have a plan in place and be able to communicate it if that's what your desire is, because difficult situations are typically not even just financial problems, they're often communication problems. So it's important for families to discuss early.
Yeah. That's good. That's good. So why is it important then for seniors not to make these decisions in isolation?
These decisions impact the entire family. Like
Yeah.
you mentioned for yourself, like you're working with your siblings to help support your mom,
Yeah.
right? So it impacts everybody, and sometimes it's even multiple generations. It could be the grandparent, children, and grandchildren. So it's important don't to
Mm,
not wait until there's like a health crisis or an emergency to come up, because then you're making decisions with pressure, confusion, and it
yeah,
becomes an emotional decision. If you're able to have the conversations early,
yeah,
then you have more room for clarity, better alignment, and it's
yeah,
typically tends to be a smoother transition.
yeah. That's good. That's good. So, in closing here, and I gotta say, Rosalie, this video is fantastic, and I'm gonna use it with some of my senior clients to help them think it through. I really like what we learned today. So, but in closing thoughts here, if there's one principle seniors should keep in mind when thinking about their home and retirement, what would it be?
So I have three core principles that I
Right.
think seniors should focus on. And first is control,
Yeah.
second is timing, and the third is choice. When you think
Mm.
about equity, you want to think of it through that lens, because your home is not just a place to live. For many Canadians, especially, it is the foundation of your retirement flexibility. And equity is not just simply about borrowing money, it's about, again, maintaining your independence, protecting your dignity, and creating options later in life.
That's very good. Very good. Well, listen, I really appreciate. I'm so thankful that you're able to join us on our channel here, Rosalie. Thanks for being with us, and thank you everyone for listening in. And especially if you stayed to the end, you're a trooper. We appreciate that. Contact information for Rosalie is going to be available to you in the video in the comment section, but the description section. I would use her if this resonates with you. She's a valuable resource available, and there's no cost to you for you to use her. So that's really nice. Thank you, Rosalie. Have a great day, everybody.
Thank you so much, Mark, for having me, and take care, everyone.
You're welcome. Bye bye.